What's up, people? I'm not going to talk too much. Let's get straight to the strategy. So how US30 moves. I discovered from countless hours on the charts that US30 moves in 250 points per move. So when I say we need to add in 250 levels, this is what I mean. We want to put in 250 levels around. Let's start where price is currently trading at. So this is what I do. I go to settings, coordinates, and I just add my round figure in. See, the strategy is based on precision, to get those perfect entries and those perfect take profit levels. So we can't be 1 point over or 1 point under when putting in these key levels. Everything has to be accurate to the point, to the T. No mistakes on this. So once we've done that, we got our coordinates in place. You see, we're on a round figure. This is what I do. I normally make my key level 250 lines 4XP and around 56 opacity. So when price does wick through these levels, you can actually see the wick. If it's too dark, you won't see the wick and it hides behind your key level. Once that's in, we need to make sure that we lock. You have to lock each key level as you put them in. Okay, so let's add all our key levels in. So from 35,000, we're going to the next 250, which is 35,250. Also, always remember to lock. I normally add around 10 key level lines above where price is currently trading and 10 key level lines below where price is currently trading. So let's continue this. It takes a while to get all these lines in. But everything I'm showing you here, once it's in, it's done for life. Your chart stays this way. Always lock. So I'm not going to do 10 up and 10 down. I'm just showing you how we get these key level lines drawn on our chart. 750. We lock that. So from 35,000, we're looking for another 250 point below price. For example, we already put our 5, 6, 7, 8, 9, 10 key level lines above where price is currently trading. Now we're doing below where price is currently trading. So the strategy is very, very, very simple. We will see as we go on. So we don't have to waste a lot of time on videos, make videos lengthy. There's no reason for that. So this first video is just showing you what I mean when I say draw put in horizontal lines on your 250 levels. Okay, I'm sure you all saw that after every line was drawn on my chart, I locked it in. Okay, I locked in each line. So when I'm moving my chart like this, my lines don't move. My key levels is fixed. They're there to stay. Okay, that's video 1. Let me catch you all in the next one. Video 1 in the bag. See you all there, guys. Hello, guys. So, 1 year and a few months later, we're at the first revised video of the Golden Spoon. This course is the answer to all your prayers. Let's go. Let me show you how to put in mid-range, right? So, mid-range is exactly half of support and resistance. So you got support at 250 level, you got resistance at 250 level. We want to put a line on in the middle of those two, exactly in the middle. So if support to mid-range is 250 points, our mid-range will be 125 points between support and resistance. So let's go right to the bottom. It's easier to work from the bottom up because you're just adding 125. So we start here at the bottom. So our first key level is on 32,000. Now we want to add 125. So we come to 32,125. Draw a horizontal line. Here's my stuff here. Here's my stuff. Okay. Draw a horizontal line, 32,125. You want to change to 2XP. Also want to change the color because you want to be able to tell the difference between a key level and a mid-range. Once that's in, you go to settings and you change coordinates. Remember, the strategy is based off precision. Not 1 point over, not 1 point under. So we don't want 32,125.1. No, we want 32,125. Once we're done with that, we lock on to the next one. Next key level, 32,250. So our mid-range is going to be 32,375. Horizontal line. Now your mid-range will be set already, the color, and it's 2XP. Settings, coordinates. There we go. We lock it in. After each point, each level, everything I teach you on the course, you lock in key levels, mid-range, zones, because that's there for life. Your chart stays like that. Next key level, 32,500. So we're adding 125, 32,625. Let go. Okay, settings, we click on the line, settings, coordinates. We in and we lock. We do this all the way to the top. So next key level, 32,750. We want 32,875. We're adding 125 points. We lock. Very important to make sure you on the exact number, not 1 point over, not 1 point under. Next key level, 33,000. We're going at 33,125. So horizontal line, click on the line, go to settings, coordinates, 125. Okay, we lock. Next key level, 33,250. We want 33,375. Okay, 33,500. We want 33,625. Horizontal line, click on the line, click on settings. Done, lock. 33,750. We want 33,875. $34,000. We want 34,125. It's much easier to work from the bottom because you're just adding. If you work from the top, you need to be subtracting 125s. It gets a little bit tricky if you went past school. So I say do it from the bottom. Much more easier. 34,250, 34,375. I can count well because I used to like money. There we go. Coordinates. If this adding 125 is hard for you, just get a calculator. Simple. As you're putting in your mid-ranges, get a calculator and just keep adding 125s. Check. Now, mid-ranges are in. I want you all to see the magic here. This is magic, guys. Key levels in, mid-ranges in. We just put lines on the chart, right? But look at the respect. Look at the respect. Look at the respect by each of these levels we put in. I'm talking touch rejections. Look at this. The key levels, the mid-range. This is magic. This is magic. But this is nothing compared to what's coming in the other videos. So, let me not linger here too much because there's some serious magic coming up in other videos. I'll catch you all there, guys. See you all in the Zone Revised videos. I'm out. Okay. Sanos is back with another one. Let's go, guys. Now, see your key level. Key levels are areas. It's not a line. Mid-range is a line. It's a point of rejection. So if your key level is an area and not a line, another word for that is a zone. So now I'm going to show you all how to put in zones. Your zone over your key levels is 90 points total. So that's 45 points above, 45 points below each key level. Here we can start from the top. So we grab a rectangle, zone, we check here 34,500. We want to go to 34,540. Okay? I mean 45. Sorry, my bad. 45, because it's 90 points. 45 above, 45 below. We put a line, we start our zone there. We come down, 45 below. We click on settings. If your zone is not already extending left, extending right, you go to style. You can click extend right, extend left. See, this is the zone I put in. Now I want to extend it. I go to extend right. I go to extend left. Hundreds. Now, we want to set this 45 points above, 45 points below. Exactly. Remember, strategy is based on precision. Not 1 point over, not 1 point under. We come to coordinates again. Go to settings. Put that on 45. Come down. This must be 55, because if we're coming lower than the key level, we're subtracting. Above the key level, we're adding. Once that's in, we lock. Before I lock, I just want to show you, I set my zones, my settings. I put the opacity on like 20% because I want to see the candles in the zone. I want to see the wicks in the zone. I don't want it to be too dark, then I can't see what's happening. You got me? Okay. So once that's coordinates are in place, we set our opacity nice and light. We can see it's a zone, but we can still see what's happening in the zone. We lock it. We move on to the next one. Rectangle, 45 points above, 45 points below. To settings, coordinates. And we're nice. We lock it. Next one. So on 34,000, we want to go to 45 points above. So our zone needs to start on 34,000, 34,045. Go 34,045. Below we want 33,955. Okay, we're moving on. We lock it in. Remember, every point you do from video 1, 2, and 3, you lock in. Make sure you lock in. And you see, not 1 point over, not 1 point under. Precision. Next one. I'm gonna go to 95 here. And here at 05. Lock that bad boy. I've got a lot of key levels here, but I'm not gonna do all. This is just to show you all how to do it. 45. 55. Settings, coordinates. Okay, set, we lock. Next one. Yeah, we're going to 95. Here we're going to be at 05. Okay, I think you'll get the message. Now you'll get the point. Okay. Once those zones are in, there's a reason for them. Watch here. You can even look on the 30. Look on the 30. Look here. Why is price rejecting there? Drop to a 15. What is going on here? Why is price rejecting here? It's magic, guys. It's magic, I'm telling you. It's fire. Look here. It's fire. It's fire. From the inside, from the bottom before it, when it touches a zone from the outside, when it's in the zone, it rejects from the inside. This is magic, guys. Look here. We put zones on the chart that side, but look how it's respecting all the way back. Till the beginning of time, US30 will respect the strategy. Some power right here. Now, the nice videos are one video away. The power packets. The power packets. So let's get to them. Next video is also a revised video. Back test. I think you will enjoy that one. I'll see you all there. What's up, guys? Okay, we're back. This video, not one that I'm excited for, but I feel it needs to be done because a lot of you are going to be lazy and do the wrong thing. So now our chart has structure, okay? We've got key levels, we've got mid-range, we have zones. I need you all to understand this. These are not points to trade off of. Please understand that. You cannot trade off of a key level, a zone, or mid-range alone. You can use them as reference points or confluences in a setup. Understand that. Please understand that, because a lot of you are going to think or be lazy and not look for a setup and think, oh, price is coming to touch a key level, let me sell or let me buy. No, that's not how we trade. These are just reference points. This is giving you a chart structure, and you will understand as the videos go on why they are there. Another thing I want you all to see, right? Till the beginning of time, where US30 started, it respects these areas, these levels. You know, each tip of zone, each mid-range, each key level, price respects it. So you have solid structure on your chart. This never leaves your chart. This is there for life. But I just want to emphasize the point. You cannot trade off any of these levels alone. You need other confluences in place. So this is a short and sweet video just to get it in your heads that you cannot trade off these levels alone. The exciting videos are starting next. I'm going to see you all there, guys. Catch you all soon. Yes. We're at the fun part now. Now we're at the magic now. Forgive me. I'm freezing where I'm at. It's 3 degrees. While I'm making this course now, this video, it's freezing, guys. So, top-down analysis. It's a new day. First time we open the charts. How do we open a chart? We open and we change that straight to a daily time frame. Reason for this, we want to see previous candle close. We want to see the previous day's candle close. Now what we see here, we see, okay, this is the previous candle day close. Buyers were pushing. Sellers rejected and pushed price back down. Already by seeing this, I'm already sell biased. Reason being that wick is longer than the body, is bigger than the body. So that means the sellers won here. Also, the body closed below a major key level. So now I want to confirm this because I'm already sell biased. So I want to drop a time frame and see what the 4 hour is saying. Let's do that. We go to a 4 hour. What do we see on the 4 hour? A bearish engulfing. A bearish engulfing that closed below the key level. So now we've got overall market direction. We're only looking for sells now because daily toe showed us that the sellers are leading here, and the 4 hour confirmed that the sellers, this is a selling market. So from the 4 hour, we want to go down to a 1 hour, 30 minute, or 15 minute. We're looking for sell patterns only, nothing else. If you see a buy pattern, if you see like a bullish candle, it's got nothing to do with you. You do not trade it. You only want to trade you only want to trade chart patterns that shows you the overall market direction, which is bearish. Please forgive me, it's cold, I'm shivering here. Might make a mistake here and there with a word or two, but the message will come through. So you got me. We only want to look for sell patterns because our daily showed us the market's bearish. Our 4 hour confirmed the market is bearish. So now we drop to a 1 hour. For instance, on a 1 hour, we don't find a chart pattern. We will drop down to the 30. If we on the 30 and we still don't see a chart pattern, we drop down to a 15. And we stop there. If you still don't see a chart pattern on the 15, you have no reason trading. You have no reason being on the market. Take your stuff, close your chart, and go and live life. You do not force setups. If the 1 hour, 30 minute, or 15 minute time frame does not give you a chart pattern that's respecting your overall market direction on the higher time frames, you got no reason on the charts. So let's go back to 1 hour. So we found direction, overall direction on the daily. We confirmed on a 4 hour, bearish engulfing, and we below key level. Now we come on a 1 hour. We're looking for chart patterns to confirm our higher time frame analysis. What do we see here? Just by looking off the back, I see a bearish flag here. It won't be too neat because it's a 1 hour and it's wiki. But if you drop down to a 30 minute, it's going to be much clearer. But we can put it in. So we'll put it in here. Here's a bearish flag. We can neaten that on a 30 minute or 15. Also, I see a double top here. Check. Here's a double top. So already we've got the higher time frame analysis, daily and 4 hour, confirming overall direction. We come down to a 1, that's one confluence, right? Overall direction. We come down to a 1 hour, we found a double top, we found a bearish flag. That's the double tops confluence number 2, bearish flags confluence number 3, and we're trading below a major key level with a bearish engulfing. That's confluence number 4. Already, you got more than enough confluences showing you that this is a selling market. But we just to show you how much more you can find on a trade, you know, how many more confluences you can find on a trade before entering. Let's drop to a 30-minute. 30-minute, we see our flag here, so we can neaten him now. Let's make him clean and tidy. I like a clean chart. Let's neaten him up nice. Okay, that's there. Our double top is there. Now, I'm going to teach you in the next video what's a spike. You see the spike here? Oh, that spike is magic. But I'll teach you all in the next video. Anyway, back to confluences. We got solid setup on this chart. If you want to check a lower time frame, you stop at 15. You never analyze lower than 15, because the lower the time frame, the more lies and manipulation. The higher the time frame, the more truth. That's why you see I always post things of these scamming traders posting 1-minute charts and 3-minute charts. That's nonsense. That's nonsense. That's just nonsense. We stop at 15-minute. Let's drop down. We are on the 15. Everything looks much clearer. Double top, bearish flag. Also, I see another pattern here. I see another pattern. Check this. Left arm, shoulder, neckline, head, right arm, neckline, shoulder, arm. Poof. There's a head and shoulder. That's another confluence. That's another confluence. So in this trade, you had like 6 confluences. You had 6 confluences in this one trade. That's how simple it is. Let me just delete this. This here. Okay. So we had 6 confluences in this one trade. That's how you want to trade. You can't look at prices trading at a key level. We can enter now. Or you found a pattern on the 15-minute. You're going to enter now. You find, for instance, you find a bearish pattern on the 15-minute. You haven't looked at the 4-hour. You haven't looked at the previous day close. That might be bullish. The overall direction might be bullish, but you found a 15-minute bearish pattern. You trade this. Then the market goes against you and flies up. You say, you know, what's this manipulation? What? It's not. It's you. Overall direction. You only want to trade overall direction. So if we found the market is bearish and we found a buy pattern on a 1 hour, 30-minute or 15-minute, we got no reason to trade. We're not trading that patterns. We cannot trade a buy pattern in an overall bearish market. If the market is bearish on higher time frames, you only look for bearish patterns, bearish setups. You look past all bullish setups. If you cannot see a bearish pattern on a 1 hour, 30 or 15-minute, you have no reason being on the charts. You walk away. Another thing I want to tell you, say we come on the charts, we open the daily time frame. We open the daily time frame. Let me just delete the stuff here so it's clean for you to understand. So we come on the charts, first time for the day, we open the daily. For example, the daily doesn't show us any clear direction. We can't see if the market's going to be bullish or bearish. Maybe you've got a neutral candlestick close on the previous day. Well and good, no problem. We go down to a 4 hour. Now we look for overall market direction on the 4 hour. If the 4 hour also has a neutral candle, you have no reason being on the market. You close that laptop right there where you are and you go and live life. If your daily and 4 hour cannot show you clear direction of the market, you do not want to be on the charts. You cannot look for overall market direction lower than the 4 hour because you're going to find lies. The 1 hour, 30 minute, and 15 minute is only to find chart patterns based on your daily time frame and your 4 hour time frame overall analysis. Hope you'll understand it. If you cannot find overall market direction on daily and overall market direction on a 4 hour, you cannot be looking for chart patterns on a 1 hour, 30, and 15. You got no reason being on the market. Hope you got that. Let's just recap. So we come on the charts, new day. We open the charts. I just want to get this notes right. We come on the charts, new day. We open the charts. We open on a daily time frame. We find direction on the daily. We drop down to a 4 hour, confirming the higher time frame direction. Once we confirm the higher time frame direction, we drop to a 1 hour, a 1 hour, 30 minute, or 15 minute, looking for chart patterns that confirm the higher time frame direction. So if higher time frame is bearish on daily and 4 hour, we're only looking for sell chart patterns. For those of you that don't understand candles, I've included a candlestick Bible. You know, you can go through that and then you will understand, you know, what does a candle mean, which candle says bearish, what candle says bullish, you know. I need you all to keep in mind that you never look for candle confirmation lower than 4 hour, please, because you will take a lot of losses on the market. You stay daily 4 hour confirmed direction, and your 1 hour, 30 and 15 minute is only there for looking for chart patterns confirming your higher time frame direction. I'm really trying to rub that in your brain so you don't do nonsense. I also need you to understand, I'm not here to teach you the nonsense you find on YouTube and in these scammers courses. I'm here to teach you how to actually make money off the charts and how to create generational wealth, you know, generational wealth that your kids can live off of. So if you want to learn, you know, how to use MT4 or MT5, you know, or how to put in a stop loss or take profit, go to YouTube. It's all there. I'm teaching you what you can't find in YouTube, on YouTube. I'm teaching you the real. Right. Guys, I'm excited. Let's go. Next one. I hope you got that. Rub it in. Watch the video again. Make sure it's in your head. Make sure it's sunk, you know, it's deep in your head. Let's go. Next video, liquidity. You're going to love that one. What's up, people? Right, we've reached the final point of the strategy breakdown under technical analysis. But now you should have all other points on lock. Everything, you should understand everything by now because the strategy is simple. So this is my actual chart that I trade with on a daily basis. The reason I'm showing you my chart is it's going to be easier for you all to identify as I already have chart patterns and stuff drawn out. Sorry. So as I'm trading, I put in my patterns and I put the names under them. So for example, if ever I'm confused of a chart pattern as I'm going, while I'm trading, I can just backtest my current chart. I say, okay, this pattern means this. This is what it does. So in the strategy booklet, in the strategy breakdown, the course, I've also included the chart patterns. So if you're confused of any pattern, you can just go and look there, confirm what that pattern means and what it does. Let me show you. You see how simple it is to trade chart patterns, and it's very, very powerful, like extremely powerful. Look here, for example, in this bearish pennant, I've got 3 patterns I can see here. There's a bearish flag, there's a bullish flag, and I can see a head and shoulder here. Can you all see this? Look here. See that? And we've got a head and shoulder. The chart patterns is it's a very powerful confluence. Let me show you how I find chart patterns, right? I draw trend lines that take shape of current price. Simple as that. So let's find a pattern where we're currently trading. I see one. The reason I draw a chart pattern on a 15-minute and confirm on a 5-minute, the 5 minutes is mainly to neaten the chart pattern. Or if it's not that visible on a 15-minute, I can drop on a 5-minute and find a pattern I couldn't see on a 15-minute. So let's finish this pattern. So you see, I'm drawing a trend line that's taking shape of price. And I see a pattern now. For me, this is a bullish expanding triangle. So let's go down on a 5-minute and neaten this pattern out. I draw my chart pattern just the way I draw a normal trend line when finding trend. I want the most touches. For me, that's perfect. So what I do now also, I want to add in a text so that it's there on my chart. If I ever need to confirm a pattern in future, I can just backtest. Pardon. I'll put this in here and then I lock it. I lock my text in. So this now, if I'm trading this chart pattern, I know we're gonna buy. So I'm waiting for a touch on this bottom trend line. Once I got a touch, I'm entering buys. I'm entering buys not only because of the chart pattern, but also we're trading above a major key level. Look here, this is support. This is a major key level, 250 zone, 250 level. So I'm looking for buys here. On top of that buy, I see now on the candlestick pattern, let's check. I saw on a thing there, I've got a morning star. So I've got a morning star, I've got a candlestick pattern, and I'm trading above a major key level. I'm definitely buying this market. Simple as that. You draw your trend lines around price that take shape of price. That will give you a chart pattern. I see another pattern here. Here's another pattern. This is a bullish flag. Look what happened. Price went up. Let's drop a time frame. Clear as day. So what we want to do now, we want to neaten this. Add in text. And I lock that in also. I see another pattern because price dropped. Why price dropped like this? Something must have happened here. There's a pattern. Let's put in trend lines. You get so in tune with this that you end up seeing patterns just by looking at a bear chart. This is a bearish flag. Okay, I need to neaten this up. Let me just drop a lower time frame. I like my stuff neat on my chart because the strategy is based on precision, like I said in the beginning. Okay, we've got a bearish flag here. So we know why price dropped. Just add this in here. So now when I look at my chart and I see all these up and downs, I can actually identify why I had all these up and downs. Look here, head and shoulder, price must go down. Bullish expanding triangle, price must go up. Bullish flag, price must go up. Bullish pennant, price must go up. Bearish expanding triangle, price must go down. Symmetrical triangle. Symmetrical is a dangerous pattern to trade. Let me tell you why. A symmetrical triangle can either break out to the upside or the downside. Doesn't matter whether you're coming from an uptrend and you find a symmetrical, or you're going from a downtrend and find a symmetrical. Either way, it's risky to trade. You rather wait for the breakout. Wait for the breakout either to the upside or the downside before entering on a symmetrical triangle. Very risky. But you see, we understand why our chart moves up and down. Look here, we're going up, we got a bullish flag, we're going up. Head and shoulder, we're going down. Bull flag, up. It's simple. And trading chart patterns is very powerful. Look here, bearish pennant, we're going down. Inverse head and shoulders, we're going up. Double top, we're going down. Bearish flag in the head and shoulder, we're going down. Very, very, very powerful way to trade, trading chart patterns. So if you trade your chart patterns and you've got your key levels marked out, support, resistance, mid-range, guys, you're going to be profitable. Believe me. Believe me. So that's it for technical analysis side of the course. I hope you can see how simple the strategy is, and it's highly profitable. The next video, I'm going to show you an entry. When you see, let me not give it away. Let me not give it away. I'll see you all in the next video. Right, guys, I'm out. Yes, people. We had an exciting video, very juicy video. I'm in the same spot, still 3 degrees, very cold, but we're doing the things. Okay, so this is a video based on liquidity. Before we begin, you'll need to understand we're trying to take money from very smart individuals, people that study their whole life. I call them the market makers. These are the people that's up in Wall Street. We're trying to take money from them. So by understanding this, it gives us a better idea of why 99% of traders are, not profitable, and why only 1% of us are actually profitable traders. Liquidity. Okay, liquidity is how market makers take 99% of traders' money to pay the 1% profitable traders. We only 1%, guys. Imagine there's 99% of traders who are trying day in, day out, to have advantages over the market, but they can't. They just don't win. Why? Because they haven't come to that realization that we're trying to take money from very smart people. So we need to up our game. We need to be one up. Back to the first point, okay? We realize that these are very intelligent people we're trying to take money from. So before we see a setup and want to enter that setup, these people already know that setup exists. They know where we're going to place our stop loss on the chart. They know, for example, the setup from earlier, right? From earlier, that bearish flag we had from the previous video. How we taught from YouTube videos? You enter the market here on the top of the touch of the bearish flag and you place stops above. The market makers know that, guys. They know that. They are going to spike the market up to take out your stop loss, and then you watch how the trade goes. I'm sure all of you will experience that before. Now, there's something on the chart I call the sight, and until you have the sight where you are able to enter on these spikes, these liquidity spikes, I found a way to beat the system. Okay, I'm going to share that with you all now. Once you'll have the sight, then you can be entering on these liquidity spikes because you will understand how the market moves. But that comes with countless hours, pure dedication, sitting, watching price, watching US30, looking how it moves, looking how it rejects. It's something that just clicks. It just clicks in your head. And once you've got it for life. Until you have the sight, I'm going to teach you a way of, having the upper hand over the market makers. So I've put in a few patterns on the chart, right? This one I did now with you. Okay. So Indice hustlers, we as Indice hustlers, we never trade with stops in negative. So, for example, bearish flag, we want to enter on that touch of the trend line, the top. Want to enter on the touch, and the way you normally taught is put stops above. Okay, so that's your stop loss in red, that's your entry in green. We never trade like this as Indice hustlers because I know that the market makers are going to spike. Before every move to the overall, to the direction of the pattern breakout, you're going to get a liquidity spike. That liquidity spike takes all the 99% of non-profitable traders to pay the 1% of us who know about the spike for the initial move. So how Indice Hustlers trades is, we never trade with stops in negative, never. Until you have the sight, this is how you're going to enter the market. You have a pattern, you place your entry. No stop loss. Market spikes out, you're in negative. It's fine. You're in negative, market comes back in, goes 1 to 20, 30 points in profit. That's the first time you put stop loss on a chart. Stops always in negative, never in, I mean stops always in profit, never in negative. Sorry for that. So let me redo this just in case I get confused. So the way Indice Hustlers trades is, we enter a trade on the top of the bearish flag. In green, we got our trade. Market spikes out. For instance, we don't have the sight yet. Market spikes out, comes back in, we in profit. Now we put stop loss on the chart for the very first time. This is the first time we put stops on the chart, and it's always in profit. Stop loss never in negative, never behind your trade, never behind your entry. You always trade with stops in profit. How do we handle this liquidity spikes? How? I found a way to beat the system by having 1,000 Rand or $65 funded. 1,000 Rand or $65 funded for every, depending on the broker, right? Depending on the broker you use, for every 0.01, or if you're trading with a different broker, they might not have 100 contract size, for every 1.00. So for every 1.00 or 0.01 you open on the chart, you will have 1,000 Rand funded, or $65 if you're trading in dollars. Reason being, if we have 1,000 Rand for every position that we open, it means the market makers need to spike out a whole 60 points to blow us. So this is our entry 34560. They spiked out to 34583. That's 20 points, correct? Entry 34560. Liquidity spike 34583. So very roughly 20 points negative, 20 points drawdown. They need 60 points. They need to spike 60 points in the opposite direction to blow our account. And with trading on the way we trade, if you'll follow my strategy to the T, and you only look for chart patterns on 1 hour, 30 minutes, and 15 minutes, it's very rare that you're going to get a spike, a liquidity spike more than 60 points in the opposite direction, unless fundamentals are at play, where that is out of your hands. We'll get to that in the videos to come. You will understand. So how we beat the system until we have the sight. When we enter a trade, we don't put stop loss in. We handle the liquidity spikes with 1,000 Rand or $65 for every 0.1 or 1.00, depending on the broker. By doing this, the market makers need to spike 60 points in the opposite direction for us to blow our account. Really happens. So now we found a way to beat the system. Once we have the site, you all will understand that the liquidity spikes in a bearish pattern. They spike to the upside, always testing the highs. Look at this. They always test the highs. And in a bearish pattern, in a bullish pattern, they will spike to the downside and test the lows. Let me show you more examples. That's what comes with the site. So let's find more examples here, guys. Okay. What do we have here? Here we have a bearish pennant. Okay. Bearish pennant. What happened here? We enter the market. Let me just open up. We enter the market on the touch. Green is entry. What happens? Market makers spike out, liquidity spike. We don't have the site yet, so we trading according to the loophole I found, right? We enter the market shoots up. Where's our entry at? 33909. Market spikes up in the opposite direction to 33941. So that's about, say, 30 something points. How do we trade it? We got the loophole. We're trading with the magic. So we have 1,000 Rand or mistake there. 1,000 Rand or 65 USD funded for every 0.01 or 1.00 depending on the broker. And by doing this, let me just put this here. That's our liquidity. Put this in green. Okay, so for every 1,000 or $65 with the 0.1 or 1.00 depending on the broker, they need to spike out a whole 60 points to blow us. 60 points. Let me put that in red. They need to spike out 60 points, guys. This is the second one where it was less than 40 points. We beat them. We beat the system here. Market comes back in. We go into profit. Now is the first time we put stops on the chart. Stops at entry. Stops at entry, always in profit. Never in negative. We never put stop loss in negative, always in profit. We put stops at entry, market goes, oof, we in the money. You see? Another example. So this is magic, guys. This is magic. Let me show you more examples. Okay, what do we have here? This is a bearish rising wedge. What happens? For example, we don't have the site yet. We're still trading with this magic, this loophole that we found. We enter the market. Oof. Okay. So this liquidity spike was nice and big. We enter our entries on 34344. Market spiked up to 34389. So that's about 45 points. That was big. You're going to stress. But remember, the market, once you understand that you'll be able to see that the liquidity spikes always test the previous high in a sell pattern. Look here, previous highs in a sell pattern. And let's just go back to this one. Also a sell pattern. Look here, previous highs, point. And in a buy pattern, we'll test previous lows. So Here we 45 points in drawdown, but we beat the system, right? Let me just bring this up around and keep typing in. We beat the system. We got 1,000 Rand funded for every position, and they need 60 points to blow us, which they failed again 3 times in a row. So we're beating the system, guys. Price comes back in. We're going into profit. With 20, 30 points in profit, we put stops at entry. Stops is in at entry, and we're sailing. We're sailing all the way. We're sailing. Another example. There's a bullish example. So we got a bullish flag here, right? We enter the market. Poof, liquidity spike happens. We entered at 343.45. Market spike to 342.98. That's about 50 points, roughly, give or take. Okay. We beat them again. We've got 1,000 Rand funded for each 01. They need 60 points to beat us. No? What happens now? Price comes back in. Once price comes back in, we're nice 20, 30 points in profit. What do? First time we put stops on the chart. Stops at entry. Poof. We beat the system again. Let's go for more examples. This is magic, guys. It's magic, guys. And look, what did I tell you all about the site? When you get the site, you'll be able to see liquidity spikes just test the previous point of structure. Look here. It came to retest the low. You know, the high, the previous high, sorry. That's how, oh, guys, this is, sorry, man. My bad. It came to retest the previous low. Let me get this. So on a liquidity spike in a bullish pattern, market will retest previous lows. On a liquidity spike in a bearish pattern, market will retest previous highs. You got me? I just confused you a little bit there. My bad. Okay, there's another pattern. Same story. Bearish pennant. What happens? We beat the system every time with this, guys. Telling you. Market comes, touch, we enter. Once we enter, I don't know if you can see entry nice here. There's our entry. What happens? Market spikes. Needs to go and retest the previous high because it's a bearish pattern. So market comes, retests previous high, it spikes out from entry 33794, spikes out to 33835. That's about 40 points, give or take. We beat them again. We beat the market makers again, guys. Here's the stuff. Let me just bring this down. So, how we beat them again? They spiked out 40 points. But we have 1,000 Rand for every position. They need 60 points to beat us. They failed. By them failing, what happens? We come back in and we go down. Once we're going down, 20, 30 points in profit, stops at entry. We put our stops at entry and we sail. We sail. This is pure magic. This is how I found a way to beat liquidity, guys. We have the upper hand over the market makers right now. And many of you all know how I trade. I won't trade here. I enter the market on liquidity. Why? Because I have the sight and you are going to get it too. I know when this thing spikes out to take out liquidity, it's coming to the previous low in a buy pattern. In a sell pattern, it's going to retest the previous high. When it goes to that point to retest that major point of structure, that's where I enter. So why this market selling? I buy here. I start barcoding my buys. And as I barcode my buys, the market turns never to return. That's skill. That's skill. And this skill I'm going to teach you all. I'm teaching you all the magic. I'm teaching you all how I do it. Behind the scenes here. This course is giving, oh, guys, the way you're going to damage your brokers. I feel sorry for them. Anyway, okay. What do we have here? Symmetrical triangle. You'll know symmetrical triangle can break to the upside or the downside. It's a dangerous pattern to trade, right? Okay, so what happened here? This pattern broke to the upside, but it took out liquidity to the downside. So you see what I'm saying? If it's a bullish pattern and the market's going up, the market makers will always manipulate and spike to the opposite direction. That's why I said in the beginning of this video, these are very smart people we're trying to take money from. So that's why after realizing that, I was able to up my game. I was able to up my game and have one up over them because I came to the realization that these are smart people. If you're dealing with dumb people, there's no challenge in this life. You'll get. So I realized they're clever, they're intelligent, and that's what challenged me to get to the point I'm at now. Right. For example, we enter the market. Poof. Entry. Market spikes out. 33478. Market spikes out to 33425. That's around 50, say 55, 56 points, right? 55, 56 points. We beat them again. We've got 1,000 Rand funded for each position. They need 60 points to beat us. We beat them again. What they do? What happens? Price comes back inside. We put stops at entry. And we're sailing, guys. We're sailing. Kwena Chow TPs. We beat the market makers, guys. You'll have the tools now. You'll have the tools to acquire the sight. Once you'll have the sight, you're going to be entering like Sanos. Yes, while it's selling, you're going to buy. While it's buying, you're going to sell. And where you sell from, that thing's never coming back. You look like you turned the market. Guys, I've given you all the keys, guys, the keys. Yo, let me catch you in the next one, guys. It's a movie. It's a movie. It's a movie. What up, guys? So we've reached entry, take profit, and stop loss. I've got a bullish falling wedge here. This is a buy pattern. In a buy pattern, we can trade in the pattern, but we can only buy at the support trend line and exit at the resistance trend line. We never sell in a buy pattern. So you never sell at the resistance trend line to take profit at the support trend line. We always want to be trading in the pattern overall direction. So this is a bullish pattern. We can only buy in a bullish pattern. We never sell. So before every breakout of a pattern, so this is a bullish pattern, we're going to be breaking out to the upside. Before every breakout, you're going to get a spike in the opposite direction, which is called liquidity. I taught you all in the previous video. Until you have the sight to enter on liquidity, see, they spike out, This is liquidity. Until you have the sight to enter on liquidity, which retests the previous lows 9 out of 10, you're going to enter the market like this. Price comes, touches entry. That's our entry point. Market spikes out to take out liquidity, hit people's stop losses. Normal traders would have entered here, put stop loss below. Market makers know that. They spike out, take out their profits, take out their stops, and then go in the overall direction. We Indice hustlers, we one up on them. So we enter, market spikes out, takes out liquidity, and we in profit now. Once we're in profit, that's the first time we put stops on the chart. Stop loss in, stops at entry, stop loss always in profit, never in negative. Let me just change this color. Okay, so green is our entry, red is our stop loss. Stops in profit, our account is safe. Our funding is safe now. Stops is at entry. How do we take profit? We're in a buy pattern. We're going up. We want to target the previous highs. So how do we get TPs off previous highs? We want the previous high bodies. So we target the previous high bodies of the candles, never the wicks, the bodies. So this will be TP1. Let me change this color. We've got TP1. We've got TP2. We've got TP3. If you've got more positions in, you're more than welcome to target more highs further back in the chart. That's your reference point, always to the left. So now, if we've got 3 positions in this trade, market comes, we break out, we are TP1, we can secure 1 position. Next TP, we secure another. Next TP, we secure the last one. That's how we trade a buy pattern. So remember, in a buy pattern, you never sell. You always trade the overall direction of the pattern. How do you enter the market? On the 3rd or 4th touch of the pattern, depending how big the pattern is. The bigger the pattern, the more touches you're going to get. The smaller the pattern, minimum touches 3 before the breakout. We always enter the market on the 3rd or 4th touch, depending how big the pattern is, and stop loss never in negative, always in profit. A normal traders, these YouTube traders and stuff, and how you taught to trade by these scammers online on Instagram, they teach you to enter the market here and put stop loss here below entry, and the market makers know this. They're going to take your money. We don't put stops in. Why? Because we have 1,000 Rand funded for every 0.01. So market needs to spike 60 points in the opposite direction before it can blow us. I'm going to show you a sell example. Okay, here's a chair. Same story. This is a bearish rising wedge. How do we trade this? We never buy in a sell pattern. So market comes, touches our top resistance trend line, we can sell, take profit on support because it's a selling pattern, but we can never ever buy in a sell pattern. We always want to trade in the chart pattern breakout direction, which is sell. It's a bearish rising wedge. How do we enter this market? Price comes, that's our entry point. Change the color. Price took out liquidity here. How many points? About 25 points. We could, remember, market makers need to spike out 60 points to blow us. Price comes back in, gives us clean entry. We enter the market. Price moves into profit. We put stops at entry. That's the first time we put stops in. 20, 30 points in profit, stops at entry. Price breaks out. Where do we take profit on this chart? We target the previous lows. So, for example, here's a low. We want the bodies. That's TP1. We close up. Remember, I told you reference points is always to the left for TPs. There's another low on the body. Let's put this here. Okay, there's another low. That's TP2. TP3. That's TP3. Always on the body. So now we've got TP1, 2, and 3 on this trade. We got, for example, 3 positions in. We close 1 at TP1. Remember, stops is at entry. We close 2 at TP2. We close 3 at TP3. It's clean. It's clean. It's clean. You need to trade, trust your analysis, and enter the market where you need to enter, even through liquidity spikes, because you will get to a point where you will be able to have the sight and read liquidity. I want to teach you something. Let me just clean this chart quickly. Just clean the TPs. And I give you another reason for tip of zone, key level, and mid-range. Let's get to a clean chart. Okay. So, for example, we've got a bullish flag here, right? Liquidity spike and breakout. Okay, we've got a bullish flag here. And we have our TP points, our highs set on just above mid-range, just above tip of zone, and just above key level. We want to set our we want to set our TPs at least 2 points below these areas. Why? These are major points of structure on your chart. And most of the time, price will touch, let me show you, price will touch and reject off of them to come and retest the previous lows. Now, you were 2 points, 3 points away from TP, and you have to wait another 2 or 3 hours for price to come retest the low, consolidate, then go back to entry, to TP. So to be safe, you'd rather lose 2 or 3 points, 5 points, and secure the bag This is how I do it. If my TPs, my highs in a buy pattern are higher than a mid-range, my TPs are higher than tip of zone, higher than a key level, I will rather sacrifice that 5 or 6 points that, to hit a TP higher than these points and set 3 or 4 points, 2, 3 points below those areas, because I want to secure the bag. I want to secure the bag as fast as I can, So on a buy pattern, if your TPs are higher than mid-range, higher than key level, higher than tip of zone, higher than key level, you want to set it 2 or 3 points lower than each of these structure points. So 2 or 3 points lower than key level, 2 or 3 points lower than tip of zone, 2 or 3 points lower than mid-range. Sell, same story, just the opposite. Guys, I'm not an artist. I'm not good at drawing, but okay, I'm trying. Let me draw for you all again. Give you all the same example. Liquidity spike and the breakout. Okay, so we've got a bearish flag. We had our liquidity spike and the breakout to the downside. And for example, our TPs, our lows, our previous lows to find TPs are lower than mid-range, lower than tip of zone, lower than key level. We want to set we'll sacrifice that 4, 5, 10 points, whatever it is. We'll sacrifice that and set it 2 points higher than mid-range, 2 or 3 points higher than tip of zone, 2 or 3 points higher than key level. So by doing this, we are trading very safely, because these are extremely major points of structure. And we don't want to trade risky. We want to trade very safe. We always want to be in profit. Yes, we will take a loss every now and then. That's part of the game. Losses are inevitable, but we want to win 9 out of 10 trades. So even when that loss happens, it's a loss from profit. We don't feel it. It's nothing. It's a lesson. You got me? This is a, if you follow to the T from video 1 till where we at now, you're going to be fire on the charts. The next video is the most important video of this whole course. Stay tuned, guys. That's fire. See you all in the next one. What up, guys? Okay. The most important part of this course. We're at that point now. I want you to understand, psychology is 90% to your trading. You can do everything exactly the way I taught you from step 1 to the last video, and you can still mess up. Your mind is going to be your biggest enemy in Forex. Yourself, your personality. As we're going along, you will understand what I'm saying. Let me give you an example, right? We find a setup, top setup according to the course. We done our top-down analysis. We found a strong a confluence candle on a higher time frame. We found a chart pattern. We waited for entry. We waited for liquidity. Perfect setup. Poof, market comes. We had entry. What happens? We enter the trade. We enter this trade. According to our analysis, the trade needs to give us 100,000 Rand, right? According to our analysis and the TP, the points that this trade needs to run. Well and good. Trade's moving as planned. We put our stops at entry. Beautiful trade. We're floating 60,000, for instance. We still got 40K to go. The market still needs to go that full trade. We're floating 60K. Say, shucks, you know, there's a lot of money. There's a lot of money, 60K. We close the trade. Once we close the trade, the market ends up going the full trade, goes and hit TP. Now we're in a situation now. We made money. We done everything right. We made money, but mentally we're not satisfied. Because why? The market ended up going and running through our full analysis. So we've got money in the bank. We've got, you know, we've mastered the skill. We know what we're doing, but we're not satisfied because we lost 40K. We were supposed to make an extra 40K then. Now what do? Now we go and look for setups and force setups that don't exist because we want that 40K. Whereas if our mind allowed us to see the trade right through, we would have made it 100,000 and be satisfied. And our level of psychology would have grown substantially in that one trade. So the point I'm trying to make is you can make money in Forex and still not be satisfied. And that's when it messes up your psychology. So now you're going to go and look for trades that don't exist, for setups, and then the market's going to chow you. You're going to blow. Because now you're not thinking clearly anymore. You're not going to do top-down analysis. You're not going to look on a higher time frame. Now you start trading candles. If it's going up, you're entering buys. If it's going down, you're entering sells. Because why? You just want to make that 40K that you're supposed to make from a trade that went perfectly. What happens? Your mind now, you've got the steam behind you because you got 60K profit in the bank. You got 60K profit, and 60K is nothing in Forex. You can lose that in an hour or two. It's nothing. It's nothing. But you, on top of the world now, you got 60K, you made profit, you're chasing that 40K, and you end up losing that whole 60K profit. Plus the money, your initial investment, the funding. I wrote down some points just so I must make sure I give you everything that I plan to give you. So now, next example. Give me a minute. Right. We enter the market. We analyze the market perfectly. We everything's to the T, just like the first time. We're waiting for entry. Entry comes. When entry comes, you don't have the psychology to enter the market. You waited hours for this entry. Entry came. You didn't enter. And what happens? Market ends up going in your direction the way you analyzed initially. Market ends up going. Now you say, you know, you want to break things. You enter. You enter while the market is moving already because you never enter on your initial entry. You had everything laid out perfect. You had your patience, your discipline, you waited, but you messed up. You didn't enter the trade. Now you enter while the market's moving. As you enter, the market turns and go and retest entry. What happens? You blow. You blow. So that was two perfect examples of doing everything right, but your mind was your biggest enemy. In Forex, your personality will shine through because there's a lot of emotions that we deal with here. There's a lot of emotions, and until you can overcome that emotions and teach yourself how to trade without letting your mind take over, because once your emotions take over your mind, you messed up. You messed up. And it's hard to come back from that point once you let your emotions take over your trading. It's very hard. I wanna see what's my next point. Apologies, guys. I just don't want to leave everything out. I don't want to leave anything out. So this is how, if you are an impulsive person, no, it's going to be a downfall on the charts. It's going to be your weak point, because you're going to have a setup, you're waiting for entry, you see a reversal candlestick on a 5 minute. You say, hey, this thing's on a turn now. You enter. Market higher time frame saying this thing must still go down. You enter, market continues down, you blow. Impulsiveness is going to be your weakness if you're an impulsive person in nature, by nature. If you are too much of a, what's the word, passive, conservative person, like, very calculated, that will be a weakness as well, because you'll have everything perfect. You analyze, you wait, everything by the book. Then entry comes, you don't enter the market. Why? You're scared. You're a scared person. You calculate everything too much, and you can't do that in Forex. Forex, you do all your calculations before you even think of entering the market. And when that entry point comes, you enter. You enter, you wait till that entry point comes and you enter. If you're going to start calculating and thinking twice, and when you're at entry, after doing everything right, you mess up. So if you're one of those two types of people, you're going to have a problem in Forex. And only you can fix that. Only you can fix that. I can teach you and mentor you, and yes, it will help the process, but you can only you can fix yourself, because you know your issues, you know your weakness now. I'm telling you what's the two weaknesses you're gonna have in Forex. If you're an impulsive person when it comes to psychology, and if you're too passive, if you're too laid back, if you're too much of a calculated person, you overthink things, bad. So how you need to find a way. How can you deal with this? I am a very impulsive person, like very. Like if I want to do something, if I want to buy a car that's too much, and it's there now, and I want it now, I buy it now. And then tomorrow, hey, shucks, I shouldn't have done that. That was stupid. Why did I do that? That was stupid, but I did it already. But I've trained myself to be relaxed on the charts. How did I train myself? I used to have a page on my my trading wall, and I used to write points, like check your candlestick, higher time frame direction, chart path, go down to 4 hour, confirm your daily time frame and direction. Come down, check you find a chart pattern. Wait for liquidity. Did you wait? I used to ask there with question marks. Did you wait for liquidity? Then I answered myself in my head. Now you can enter the market. Then I'll put there after that. Did you put stops at entry? Did you hold your trade to your full analysis? That's how I dealt with my stuff. But I'm still impulsive now, but not on the charts. When I step in front of the charts, I humble myself totally and completely, because this thing finished me. This thing finished me. And after I gained respect for it and realized how dangerous it is, it's given me unimaginable wealth, guys. It's given me unimaginable wealth. Like, I can't even begin to explain. I'm not here to blow to thing, but I'm just telling you, the way I see it, there's no other way. There's no other way with this thing. There's the right way, and it's finished. You know, we've got thousands of traders, but you can count how many of them are actually profitable. Why? They can analyze, but they can't trade because they don't have the psychology. Let me give you an example here, right? You got people working, you know, they analyze the charts, they analyze stocks, they know where it's gonna go next month, next week, next year. But they're driving a Golf 1 or a Polo in the parking of the business place. Why? Why? They can be multi-millionaires, billionaires. Why? Because they don't have the mind to follow through with the analysis. They don't have the mindset to actually enter the trade according to the analysis, but they know what's going on. So you can be how good on the charts. You can be what top analyst. If you don't have a strong mindset, you're nothing in Forex. And the only way to become someone is to train yourself. It's possible. It's a skill. It's a skill. Forex is a skill. It can be taught. It can be mastered. You check. It's a skill. You're always building. You're always learning. You're always, becoming better. So if you have issues, it's things that can be fixed. You can fix it. I hope you'll understand this. Psychology is very, very important, guys. It's key to Forex. It's key to becoming financially free. There's no other way. Check my notes here, guys. Okay. Example, right? Losses are inevitable in Forex. It's inevitable. You're going to take losses, whether you Ricardo Sanos, whether you Elon Musk, you will take a loss in Forex. You can have, example, you got a strong buy setup. Everything is showing you this market needs to buy. You wait for entry, you enter the market, poof, the market sells. 2 minutes later, you get a message on Investec or these apps with news. Yo, Russia bombed a NATO country in the Russia-Ukraine war. Remember, as stuff happens in the world, the market reacts, but you only know what happened after the reporters release it. But the market already reacted. So you had strong buy setup. You find out afterwards, you enter the market sells. You find out afterwards, you know what? There was fundamentals at play here. That loss, you take like a man. You take like a man, you close your charts. I took a loss, thank you. You go live your life, get your mind right, take it in, accept it, and when you come back onto the chart, you come back fresh because losses are inevitable. That's why I don't trade news. You don't see me trading news. I'm very against that because that is gambling. Do you know what's going to come out of that man's mouth when he's standing there going to talk, and whatever comes out of his mouth is moving the market up or down? Do you know what's going to come out of his mouth? No. You're gambling. Go to the casino. This thing is dangerous. Forex is dangerous. This thing ended me before it built me. And you don't have to go through the struggles I went through and pay the school fees I paid, because I went through it and I'm teaching you all how to avoid it. Understand? Don't trade news, trade structure. You got nothing to do with news. News happens, for example, 4 times a month. 4 times a month, you're gambling. It's 50-50. Maybe you're going to win, maybe you're not going to. You got 20 trading days in a month. If you're trading structure only, and you take 3 trades a week of structure, that's 12 trades a month. And you know, there's months I go through where I don't take a loss. There's months I go through where I take 1 or 2 losses, because why? I trade structure only. No fundamentals, no news. I'm not gambling. I have a set of rules in place. And no matter what, if one of those confluences that I have in place are not met, I will not enter that trade. I'll close my charts. I'll tell my family, pack up, let's go on a holiday, or I'll go find something to do with my car, or, I'll do something, but I won't trade. I'll close the chart. That's the mindset you need to have. Because the only way to become a profitable trader is to have consistency. And how do you get consistency? By having repetition. Repetition means you have a set of rules, and no matter what, even if I use this set of rules now, I enter the market, I take a loss. Okay, sharp. I come back to the market, I use the same set of rules. I change nothing. Nothing. Because the more you change, every time you take a loss and you change your strategy, your style of trading, every time you change, you're going to pay school fees. You need to master that new change. You need to understand it. You need to see, does it work? Why go through all that? Where you have something that works. You have something that works. The way what I taught you all in the videos prior to this works. Guaranteed. Tried, tested, it works. You don't change nothing. You do what I taught you, and you add nothing more and take out nothing from what I taught you. And you're going to be consistent because you're not changing anything. You're using the same thing over and over and over and over, trade after trade. Even if you take 10 trades and you lose 2, you are a consistently profitable trader, because losses are inevitable. But those 2 trades you lost is from profits. If I take 10 trades, 100 Rand a trade, I win 800 Rand. I lose 2. I lost 200 100 Rand per trade. I'm still in 600 Rand profit. I'm a profitable trader, consistently profitable trader. You check. That's how you need to look at this thing. Don't every time you take a loss because of fundamentals, because of your own mindset, you were too impulsive or you were too laid back, you never enter where you're supposed to enter. Don't go change. Don't go change. No, this strategy works. But guys, this is magic. This is magic. There's one more thing I'm going to tell you. Yo, guys, if you get your psychology right with what I taught you now, you're going to be fire. You have a lot of notes. Yeah, the site, I gave this thing a name. Guys, you know, when I got the site, it was something that just clicked. It just clicked because I used to sit and watch US30 after it, because US30 dealt with me. It hit me broke, Then I went into a depression phase. In a depression phase, I ended up going in my trading room. I used to lock in the trading room, the thing that finished me. And I used to just watch this thing for weeks, for days, for months, maybe about 2 months, just to watch this thing. And I created a strategy, you know, making money with a strategy, everything's going well. And then something clicked. I started knowing when a candle is going to react. Like I can't explain the site to you. I can't, as much as I want to, I can't let you see what my eyes see. But if you put in the work, if you dedicated, if you invested in this thing and you watch it and you give it what it needs, the time and the dedication needs, you're going to get the sight. When you got the sight, guys, nothing will touch you. You'll be unstoppable on the charts. You'll be dangerous. Like now I can take 2 trades for the week and I'm good. I'm nice. I don't need to trade every day. I enjoy life now. I'm at a point where I enjoy life. And I take 1 trade every now and then and I'm well, you know, because I've got the charts like that now. And that's because of the sight, the skill, the discipline, the patience, the psychology. Check. Guys, no, this thing I can go on and on and on about psychology, but we'll never end this video. I want you all to take this in, understand it. You know, guys, I've given you the golden spoon with honey served on a platter to you, brought it to you. Use it. This is generational wealth. This is you, your kids, your kids after them. That's the type of wealth you can create off this knowledge. Understand? Don't mess it up. Use it, understand it, do things the way I'm telling you. There's no other way about it. There's one way, it's my way, it's the right way. Straight talk. Straight talk. If you want that extra over a market, I have the advanced strategy, but that's not in a course. That is mentored. We mentor, like it's done one-on-ones or Zooms. It's not in a course. That's if you want that extra power over the market. But guys, it was lovely. From Indice Hustlers and me, Ricardo Sanos, love and respect to generational wealth.